So continuing the tradition of actually picking on acronyms, we moved from 3S to 6Ds and then 3Ds, and that was also innovated whilst he was there and added another C, so it's 4 Cs. With that, let's move on to our next speaker, which is Henry Chong, who is the founder and CEO of Fusang Exchange from Hong Kong. He will be talking about crypto and digital currency. Are they here to stay? I wonder if he also has another acronym to add. Henry, the floor is yours.
Mic falls off. Good morning, everybody. How's everyone doing? Hope you can hear me okay. My name is Henry Chong, and I'm the CEO of Fusang. Fusang is a digital stock exchange focused on one thing: how we can take an existing world of financial institutions, global banks, brokers, etc., and bridge them into new technology. The stuff that everyone's talking about with some degree of hype these days, blockchain, tokenization, etc. But importantly, and I think uniquely, I don't think that the financial ecosystem, the banks, brokers, custodians that you see today, I don't think that's going away. The key is, how do we use new technology to allow existing financial institutions to rethink how they interact with each other and also how we interact with our consumers. I'm going to talk a little bit today about Fusang and also talk a bit about how I see tokenization and try and keep this all brief so we can get on to the interesting part, all of the questions. But first, I'd like to just play a quick 60-second video of Larry Fink talking about tokenization.
I actually believe this technology is going to be very important. Look at it. We have been part of a huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, well, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we can have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Larry Fink, CEO of BlackRock, the world's biggest asset manager, I think he's got the right idea. There's a lot of hype, a lot of hot air, quite frankly, whenever you have new technology. And BlackRock, I think, is interested in things like tokenization because they became the world's biggest asset manager through one of the last tech revolutions, if you will, the creation of ETFs, exchange-traded funds. And if you think about it, an ETF is just a wrapper, a way for people to buy into sets of underlying securities in a different way, in an easier way. And all of us, I think, who are excited about tokenization are excited because we see it in the same way. New tech that takes existing processes, existing assets, and just rewraps them in a slightly different format. Fusang, we are, as I said, licensed as a traditional stock exchange and in many ways focused on how we can bridge traditional counterparties, if you will, banks, brokers from all over the world, interact with them just like any stock exchange would, but again, trying to do so with a new technology layer. I don't think that when you have blockchain or tokenization, it has to be new assets. There's a lot of hype today about things like Bitcoin and crypto, and honestly, Bitcoin as an asset is fascinating, but its role in the world economy in the years to come, we'll need to see. What I think is very clear, increasingly clear, is that we can use the same concepts that you see from the crypto world and apply them, as I said, to ecosystems of traditional financial institutions to take the existing assets that we already interact with, invest into every day, shares, bonds, funds, sukuk, etc., and put them on the blockchain in a way that then becomes digital, that then becomes interactable. We can talk a little bit more about how to do that. But again, as I said, Fusang, we're entirely focused on how do we take existing regulated financial institutions, the jobs that they need to do, and simply update it for new technology. In many ways, we interact just like a traditional stock exchange. You've got brokers plugging in, serving their clients on one side, what we call listing sponsors who can bring assets, apply for listing on exchange. But we've architected something that we call the Fusang chain there at the bottom, not as a separate blockchain, but as a way of us basically keeping track of who the members of our exchange are. Any stock exchange, we've got sets of regulated FIs that we interact with, and we use the Fusang chain to, number one, keep track of who they are, but more importantly, to be able to take every asset that we create, whether these are tokenized shares, bonds, or even sukuk, and be able to map all of these tokens under one of our regulated financial institutions. And we do this because, like I said, there's a lot of hype around blockchain, but I think there are two fundamental issues with the way that the crypto world is today. Number one is what I call the dodgy assets problem. You have these tokens, and we're never quite clear what the token might represent. And unfortunately, in some cases, the token doesn't represent anything at all, is the whole issue. So number one, as I said, I think it's very important that we start to rethink tokenization as a concept and have tokens represent the assets that we already own, invest, trade, etc. The second big problem, as I see it with the crypto world today, is what I call the dodgy counterparties problem. We interact with firms. There are plenty of well-publicized exchanges that have blown up recently in spectacular fashion. And unfortunately, the way in which they operate is just not what we're used to with regulated financial institutions. And it's exciting to see that more and more, big banks, even central banks, are rapidly shifting to focus on tokenization as technology, and starting to say, well, how do we, the existing network of regulated financial institutions, continue to interact with each other, just doing so, as I said, with new technology. So instead of having that second problem of dodgy counterparties, we actually know who we are, we transact with the people we're used to, we use the blockchain to do, as I said, our existing jobs, just in slightly new ways. Well, what is tokenization really? Right? I think as a concept, it can be quite confusing, not least of which, because as I said, often people are printing these crypto tokens out of thin air that don't really represent much of anything at all. In my opinion, the correct way to do it is to, number one, think about how do I use tokenization to encapsulate, as I said, existing assets. You've got a lot of projects like CBDCs, for example, when central banks are saying, how do I take my existing money and then record it in digital token format? Lots of commercial banks, JP Morgan, HSBC, Citibank, have started to explore what they call tokenized deposits. So these are still, when you put money in a bank and you're a depositor, why not encapsulate that in token format? Again, the exact same thing legally as though I were depositing money with a bank, but just now with a digital machine interactable token. But to me, when you start to think about, well, how do I represent an asset like a share as a token, there are a few ways of doing it. Sometimes people create contractual interests, honestly very messy, or they've got weird structures and SPVs in between, all of which is never quite the same as having direct ownership of the underlying asset. To me, the two ways of doing tokenization of securities and assets properly, number one, you either do it, as I call it, natively. Have the token directly represent the underlying share or bond cert. Do this in some jurisdictions. Fusang, for example, we've swapped all of our equity in our company for tokenized equity. We haven't issued new shares. We just took the old paper share certificates that we have and basically converted them to tokenized share certificates, but still the exact same thing, if you will. That's one way. But I honestly think that in the short term, what's needed is something that we've pioneered recently with what we call FDRs, or Fusang Depository Receipts. Basically, for those of you who are familiar, as a copy of the American ADR model, as a way of taking existing securities that have already been issued, holding them as a central depository, like most stock exchanges would, but then generating a tokenized depository receipt representing that underlying asset. And this was an important concept for us to pioneer, because as I said, I think in the near term, this shouldn't be a discussion of traditional or digital markets. It's about bridging the two. And most excitingly, a few weeks ago, we announced that we'd launched the world's first tokenized institutional sukuk. We took an A1 rated instrument, digitized it without changing anything about the underlying instrument. And that was important to us so that we could show that we can take a Sharia compliant instrument, have the tokenization process be Sharia compliant, and have the token itself be Sharia compliant as well. Probably talk a little bit more about why I think, for example, this is exciting for the Malaysian Islamic finance market. But as I said, to me, we should start thinking of tokenization as a way of existing financial institutions interacting with each other, interacting with their clients over the assets that people already want to trade. We're at the very beginning of this journey, and to me, it's up to all of us here in the room to figure out how to shape this new trend and to shape really the future of finance. Thank you.
Thank you very much, Henry. So Henry has given us a very important detour of what the future may herald, especially with tokenization and some insights.